Hi there, welcome to Kneppy Invest and welcome to December 17, 2024. We have about 25 minutes left of trading today, 13 and a bit minutes left of normal trading. And I am pleasantly surprised to see lots of green apart from mining. I am quite surprised that we are up this big. Now, the reason why I'm surprised is because even though the Nasdaq was up 1.45% or something like that, the Dow Jones Industrial was actually down at 0.25%. And we tend to follow their lead, the Dow Jones Industrial, instead of Nasdaq, just because the ASX is made up of mostly non-tech companies, where financials, mining, those sort of companies. So we tend to follow the Dow Jones a little bit more than the Nasdaq. But I am not going to complain. Tech's had a pretty good day, which is understandable, up 1.14%. Anyway, another reason why I'm a little bit surprised we're up big today is because I just noticed before I started recording that Australian consumer confidence falls on economic concerns. This is not a good thing. We want consumer sentiment to be pretty good. We want people to be excited about the future, to be bullish about the economic future of this country, because then they're more likely to spend. If they're bearish about the economic future of the country, they're more likely not to spend, because they're concerned about their job. And if they're concerned about their job, they want to increase their savings for a rainy day. That's what we're all supposed to do that. So when we do see consumer confidence falling, that can have negative effects in the medium to longer term, particularly if it doesn't improve. Now, it's really weird because in saying that us spending as consumers is really good for the Australian economy. But it's not really good for us as individuals, because we need also to be mindful of our future selves and invest for the long term. And if we are very wise when it comes to investing for the long term, particularly when we start investing, more than likely we're not spending as much. But if we're very wise investors, we will delay that spending to the future. And in a way, the government doesn't want us to do that. They want us to spend. And in fact, I have heard someone say, yes, someone said this to me, that they have troubles investing simply because they know they should be spending to help the economy. I found that one of the most bizarre things for someone to have said. And so in a way, I think that investing is selfish, and we are allowed to be selfish when it comes to this, because I don't think the government is going to help us all that much when we retire, unless you're on defined benefits, that sort of thing. I don't think pension is enough, so we really have to look out after ourselves when it comes to our retirement. And the best way to do that is to make sure you invest wisely, compound your capital, that sort of thing. And the best way to do that is not to spend as much as you otherwise would have when you are younger. So it's a really weird dichotomy between spending and not spending, because spending helps the economy, but not spending helps your future self. Anyway, let's move on. Did I use dichotomy in the right way there? Dichotomy, don't even know how to spell it. Dichotomy. A divisional contrast between two things that are represented as being opposed or entirely different. I think I did sort of. I don't know. Anyway, let's move on to the agenda for today's video. So we are moving towards the most boring time of the year. Now, in saying that, I have come up with the top 5 stocks of the day. And I did leave out a few companies that got very close, including Botanics. Botanics did release an announcement today. Share price did pop up in regards to getting a loan from the American government, a pretty big loan. So I might mention that company. The share price did increase. But I do or have come up with the top 5 stocks today. So we'll have a look at these 5 companies. By the way, I have already recorded the stock of the day, which is Data3. It was a contest between Data3 and Karoon, and whichever company was down the greatest percentage would be the stock of the day. So congratulations to Data3, you beat out Karoon Energy, but in this case, it was not a good thing because your share price was down more than the other company. And the other few companies in the top 5 stocks, a few of them are fairly small. Yeah, 2 fairly small companies, and another company that has hired a CEO and the share price. The market loves it. Share price up a fair bit. That's Pexa Group. Okay, and before we have a look at the top 5 stocks, we'll go through the market, sectors, indices, and also the top gainers and top losers. And then I might have a look at a few of your comments. I have plenty of time, but I want to keep the video to maybe 40, 45 minutes. Okay, so let's have a look at the ASX today. It's been a pretty good day, unless you're heavily invested in mining. And it looks like the market opened down. Yeah, the market opened down. That's really interesting. That's really interesting. Actually, you see that here. It did open down, and it just went a really nice rally through the morning. It's gone sideways through most of the afternoon, but definitely something happened. I'm not sure why the market was really excited after the open, but it was. So the open, not surprising that it was down because Dow Jones Industrial was down, but something happened. Maybe it was the Asian markets, although they would have opened up after us. I don't know. Japanese shares rise on Wall Street boosts. Well, yeah, it's Nasdaq, not Dow Jones. Yeah, maybe it was Bitcoin hits new record high. Who knows? Business activity in New York stabilizes. Why do we care about a state in America? Okay, so let's move back to the best and worst performing sectors and indices. A lot of green here. In fact, fair few sectors up by more than 1%. We'll say real estate, healthcare, industrials, telecommunications, financials, discretionary, and even IT up 0.99%. I don't know why I said even. In fact, I expected IT to be the best performing sector. So I'd assume that real estate, Goodman Group's had a really good day. Healthcare, CSL's had a really good day. Industrials, I can't remember who's industrials. Telecommunications, maybe Telstra. Financials, banks have had a good day. Not a good day for utilities and energy. So that would be, well, that definitely has not been helped by Karoon. But let's have a look at energy. So we've got uranium companies, oil companies, coal companies. So something is down today when it comes to energy. So let's have a look at the biggest companies in the energy sector. So looks like oil might have had a bad day. Woodside down, Santos. The reason I said Yantos is because we had Santos and then just below that is Yancoal. So just combine the two into Yantos. Anyway, so Santos, Ampol, Whitehaven Coal down, which is interesting because Yancoal's up, Whitehaven down, New Hope down as well. So it looks like there's a fair bit of a hit to most of the energy participants here. Uranium down, yep, yes. Paladin's down, NextGen Energy's down, Deep Yellow's down big, Energy Resources down big, and there's Karoon Energy down 9.5%. All right, so let's move on to the ASX 20. Let's have a quick look at the ASX 20. Up 0.88%. I would expect most of these companies up. I'm interested to see how the iron ore companies have done. Have we seen a bit of a bounce? Down a fair bit yesterday. Have we seen a bounce in iron ore? Let's have a look. I forgot to say, 18 companies up, 2 down. Which are the 2 unfortunate companies? Energy companies. Wait there, let's have a look. Of course, Woodside. And now it's only 1 down, and Woodside is the only company down. BHP, Rio Tinto, and Fortescue are coming, or are the second, third, and fourth worst performing companies, but they're still in the green, still up slightly. And the best performing company, REA Group, Aristocrats. So we have tech, Goodman Group, real estate, and then Transurban Group. I think that's utilities and CBA up 1.55%, up to $161. It's insanity. Insane. Now, I'm thinking it was high. No, it's reached a new all-time high. This is insane. Just getting more and more expensive. And it's just weird that people are still buying CBA. The PE ratio of CBA, well, it hasn't got anything here for some reason. The dividend yield is only 2.94%. You get better returns just by putting your money in the bank, and there's less risk moving forward. It's insane. I'd say the PE ratio is almost at 30, which is the sort of PE you'll see for a company that is growing at a significant rate. CBA is not doing that. So anyway, my money is still piling into CBA for some reason. I have no interest, but it's I think this is only going to be a really good study looking at a bubble that is ongoing, happening right before our eyes. I believe CBA is in a bubble right now, and I think eventually it's going to burst. It has to, because PE ratio of 30 for this type of company is way too high. A PE ratio of 15, 16 would be about right. So that would mean the share price would have to drop $80, $80, yeah, half. Share price have to drop half for me to even be a little bit interested in buying some shares in this company. So anyway, I'm gonna, who knows? The share price could keep on going up. I don't know how, because as it goes up higher, the PE ratios just expand. So what we're seeing here, as the share price has increased through 2024, is margin expansion. No financial expansion, it's margin expansion. The market is more and more willing to pay a premium for this company. For some reason, it's mind-boggling why anyone would want to pay a higher premium for this company. Someone can explain it to me. I want that explanation. It's mind-boggling to me. Anyway, because this company is not going to grow. The CEO actually said that, was it a year ago? Said our growth phase is over, but we're less risk. So maybe that's why there's less perceived risk when it comes to the banks. But even then, if we go into a deep recession, banks are going to be hit really hard. Banks are cyclical. It's an absolute truth. Banks are cyclical. Don't forget, Westpac nearly went broke in 1990 recession. I'm pretty sure they were bailed out, yeah. Anyway, I'm pretty sure they'll bail it out. Let's have a look. Westpac bailed out 1990. Let's have a look. It looks like Paul Keating bailed out, maybe that was Commonwealth Bank. Anyway, I'm pretty sure they were. I'm pretty sure they were bailed out in 1990. Anyway, maybe it was another bank. Anyway, so let's move on. Spending a little bit too much time on that little topic. Let's move to the best and worst performing companies. The top gainers. Top gainers. By percentage change, see if I've missed any significant announcement. By the way, a company called Cyclone Metals. Just by the name, I like that company. Cyclone Metals. Fairly high volume. So I wonder if this company did release anything. Cyclone Metals, ticker code CLE. Not sure if I've looked at this company in the past. And no, they did not release anything. In fact, they did receive a price and volume query from the ASX. Let's have a look at the chart. Let's just see if this was just a one-off. And, ugly chart. I'm going to go to ComSec. For some reason, sometimes the TradingView chart is not good. They don't make the right adjustments. It doesn't happen all that often. So this company looks like something happened in this company in October, November. It looks like they're probably in a trading halt for a long time. And then they came out of trading halt in October. And the last 2 days, we've seen the share price rise on increasing volume. No idea why. You can have a look at the announcements just to see what's happened. Why did they come out of a trading halt, a long-term trading halt? Suspension, trading halt suspension. Maybe it wasn't that long. Looks like they were putting a trading halt on the 7th of October and came out of the trading halt on the 10th. That doesn't seem that long. In fact, we can confirm this. If you look at the trade history, yeah, they'll trade. Oh, they did a capitalization. Yeah, the share price was 0.1 cent, and they did a share capitalization, consolidation. That's why. Yeah, the share price was 0.1 cent. That's why we don't see anything. Yeah. Okay. So let's move on. They did a consolidation, and for some reason, the market is excited about this company. No reason for us to be excited, to be honest with you. Anything else of interest here? Oh, EZZ Life Sciences up 15.6%. I think the bottom has been reached for this company. I don't think the company released any news. If they did, I would have known it because I'm a holder of this company. In fact, up 17.11% now. Let's have a look. Did I miss something? No, I did not. And yeah, I think we've seen the low. Funny enough, I did have a downtrend line here. This is that downward sloping dashed line, and it broke out of the downtrend on the 4th of December, and we confirmed that on the 5th. That would have been the time to buy, and I just didn't buy more shares. I should have bought more shares, and now we've seen a pretty good day for EZZ Life Sciences, and I'm going to call it the downtrend has come to an end. The bottom has been reached at $2.40. Okay, let's move on. Anything else of note here? Singular Health keeps on chugging along. But I should have bought some shares on this company when they had a little bit of a dip. There was a nice little rally and then a dip. Not much of a dip. It was a one-day dip. Still remember that. Went down to about 12 cents and beautiful chart and beautiful volume coming through for Singular Health. So this is another great chart. Do they have this? I don't have this in my watch list. I should. My buy watch list. Okay, so we have Auric Mining there too, and Raise Invests. Okay, let's have a look at the top gainers by market cap. See if there's any companies near the top. Okay, yes, Mercury New Zealand, pretty good day yesterday, if I remember. Well, no, maybe it was another company. I'm trying to remember. It was Contact and Meridian. It was not Mercury. Did they release anything today? Yes, they did. But financial year 25 interim results announcement date. Maybe the share price ran because of Contact and Meridian. Had really good days yesterday. But you can see we're in the closing auction right now, and the indicated price is down 5.14%. So someone wants to sell, so one person wants to sell some shares at a lower price, and that sends the share price down by 5%. That can happen to illiquidly traded companies. Now, more than likely, this particular trade will be pulled, so you won't see the share price drop 5% in the closing auction. Maybe it will. Anyway, so let's move on back to the top gainers. So Digico Infrastructure REIT, the third day of trading, 2 big down days in a row, up 6.28%. So a nice little rebound, which would mean HMC Capital probably has had a bounce. Not much of a bounce compared to the other one. Pexa Group, I'll talk about Pexa Group. It is in my top 5 stocks. Mesoblast, Cettire, Vmoto. I'll talk about briefly that company. And Energy One keeps on going higher. This is an interesting one. I actually have held this company in the past. So the market's excited about this. And this is a really good chart. Nice looking chart for Energy One. You can see massive volume coming in late May, early June. And that seems to be the trigger for this rally in the share price. I'm not sure what happened there, but that seems volume precedes price action sometimes. And in this case, it looks like that's true. So Energy One on a bit of a tear over the past 5 or 6 months, increasing by about 50%. Okay, let's move on. Anything else here? Nothing. Yep. Okay, so let's move on to the top losers. I already know 2 of the top losers by market cap. So it's going to be Data3 and Karoon will be in that. So I'm just going to have a look at top losers by percentage change. Vmoto, another company, has decided to delist off the ASX because they're undervalued. And the share price then drops 33%. So if they're undervalued before, now what are they? Significantly undervalued. And again, time and time again, I always say this. There is a discount for companies not trading on the public markets. There is a discount. So if you think you are undervalued when you're trading on a public market, like a equity market, you're going to be valued less when you're a private company. That is a fact. I still don't understand why these companies, the management of these companies, are saying we have to delist because we are undervalued by the market. And we always see the share price react like this. And it just shows you. It's just more further proof. It's further proof. Anyway, so Vmoto says we don't want to be on the ASX anymore. We can be valued higher as a private company. Bollocks. Anything else here of note? Istana, which was my small cap of the day, down 16%. And that sort of makes sense because the share price has been a downtrend, and we did see a fair bit of selling yesterday. And I'm not surprised to see this. The selling has continued into today. Not surprised at all. And the whole reason there's been a lot of selling is because the share price has been in a downtrend. And if you didn't sell yesterday, you want to sell today. And if you're not selling today, maybe you're too late to sell at a significant loss. Anyway, so let's move on. Nothing there of note. Let's have a look at the top losers by market cap. And there's the top 2. The 2 companies that were fighting out for the top stock of the day, Data3 and Karoon Energy. I've already done the video on Data3. I'll briefly discuss that company later in the video. I'll talk a little bit more about Karoon Energy. WA1 Resources down a fair bit. I'm not sure what's happening there. I think it's just noise. I had a look to see if they'd released any announcements. No. Phineas up and down. It is illiquidly traded at times. Titomic down. So it seems like maybe it's in a downtrend mood. So if you think of an uptrend as waves, so share price doesn't move up in a straight line. If you think of it as waves, this is a part of the downward part of that wave. You can definitely see it here by looking at this Titomic chart. It doesn't go in a straight line. It goes in waves. So nice rally back in July, then it pulled back. A nice rally in October, November, and now it's pulling back. So maybe now is the time to think about buying some Titomic shares. Or maybe the share price will keep on dropping. Now, the one thing I do like is we have seen some big volume coming in the last few months. That is a good sign for Titomic. Okay, so let's move on to... I don't remember Michael Hill releasing anything today. I could be mistaken. So let's have a quick look at announcements. Oh, looks like change of directors interest notice. Daniel Bracken. Is he selling some shares? And the market has had a bit of a... Yes, he sold some shares. Not a lot. Hopefully the market isn't selling because of the amount of shares he sold. He sold 1,470 shares, totaling $900. And the reason he sold some shares is to fund upcoming tax liabilities. I'm hoping the market didn't sell off because of that. That would be one of the weirdest sell-offs because someone's selling some shares. $900 worth. There's no signal there. So maybe it's more of just noise. Let's have a look at the chart for Michael Hill. I'm trying to remember this chart. Yeah. So I had this on my watch list because I just wanted to see if the share price can break above this horizontal line, this resistance line at about 60 cents or just above 60 cents. It's taking time. If it can break above that line, that level, that would be a good move. That would be a bullish move. And I think today is just a bit of noise. So we can move on. It's not because the director sold $900 worth of shares. I can almost guarantee you that. If the market did sell off because of that, stupid market. I've lost respect for the market if that is why the share price was sold off. Okay, let's get to the top 5 stocks of the day. And we'll start off with, I always list the top 5 stocks. I have a notebook, by the way, for those who don't know. So every single day I write stuff in this notebook. And I put the top 5 here. Sometimes I change it. Anyway, so coming in number 5, we have Botanics. Botanics Pharmaceuticals. Share price flat. I don't care about that. It's just they did release an announcement today that I like. First, Softra prescriptions as commercialization ramps up. I like the sound of that. I like when companies are starting to sell stuff because that's where revenue comes in, receipts comes in, and if they can grow receipts and revenue, keep a control on cost, eventually the company could become profitable. So this is a step in the right direction. Commercialization ramps up. I like the sound of that. I had a very quick look at this announcement and I can't remember a single thing. I usually am turned on, and the reason I said that is because I am usually excited by financial numbers. Just saying you're ramping up commercialization doesn't necessarily do anything for me. So I would prefer to see the results of the ramp up in commercialization through numbers, receipts, revenue. Is it working? Is this ramp up working? Do they have enough addressable market to be on the path to profitability? That sort of thing. But it is the step in the right direction. Inventory build and logistics infrastructure testing completed to support full commercial launch in the first quarter of 2025. Marketing and sales materials developed, tested and refined. Salesforce engaged and preparing for launch meeting in late January, followed by digital program expansion. So even though this is not the sort of announcement that would get me, that would not be sort of a catalyst for me to buy some shares in a company, I am definitely going to be following this company a little bit more closely. I've way more closely than I have been in the past. Down a bit further, first prescriptions of Sofdra have been shipped directly to patients as quickly as within 48 hours of starting the telemedicine process. So I don't know much about this company. Don't know much about the total addressable market. So there's much to learn about Botanic. So if you know more about this company, I'd love to hear your thoughts about Botanics and what is the potential of this Sofdra. So let's have a look at the chart. And has the market been excited about this company? Is it still excited about this company? Is the share price in an uptrend? And I think the answer to that is yes. In fact, the share price of this company has been in an uptrend since start of 2023. You could have bought some shares on the breakout about 8 cents and have done very well since then. The market cap of this company is 672 million, according to TradingView, which is telling me the market is quite confident that this company will probably be producing quite a bit of revenue and receipts. I probably can lump those two together: revenue and eventually profitability in the future. So they're confident about this commercialization ramp up. Anyway, and the chart looks pretty good. Nice little dip, beautiful bounce off a support level back in November, 20th November. A beautiful bounce off about 30 cents, up to 38 cents. So this is a nice looking chart. And I'm still waiting. The main thing I'm waiting for is the numbers. I'll just say that. The main thing I'm waiting for is the numbers. But things are moving in the right direction for Botanics. Okay, coming in number 4, we have another small company. Well, I thought Botanics was smaller than 640 million. This company, Control Bionics, is definitely smaller. Share price actually down. There you go. Now, they released a sort of announcement I like. First half, financial year 25, business update. How is the company performing? Now, this is the sort of company we want to be successful because they help people who have mobility issues. So I'll let them talk about how they or what they do better than I would. I just totally messed that up. I'll let them explain their business model because the way they explain it would be much better than the way I could explain it. I just said they help people with mobility issues. They call themselves a medical device company assisting patients whose ability to communicate. Oh, I was completely wrong. It's ability to communicate. I thought it was ability to walk and that sort of thing. So they help patients who have difficulty communicating verbally or via text and social media. For some reason, I thought they were doing wheelchairs and stuff like that. Maybe they do that as well. So they help people with motor neuron disease, which is awful. Patented neuronode technology is a wireless wearable device that detects minute signals sent from the brain to any skeletal muscle and is captured by EMG output. For some reason, I still thought they were doing... Oh, yeah, they do. Yeah, they do. I was right. Control Bionics also have this thing called Drove, Autonomous Wheelchair Module. Yes, that's how I remember this company. So I have learned now by thinking they only do wheelchairs. They do more than that. They're involved in communication, people with communication issues. So we want this company to succeed. If anyone says to me they don't want this company to succeed, I will have to look at them with a bit of, are you a psychopath? That sort of thing. Anyway, Control Bionics, the whole point of this particular announcement was business update. How are they going? And this company's selling stuff. So they have revenue. So they talk about their revenue performance, and I think that's probably not the most exciting thing. So revenue is increasing. They're talking about US revenue and overall revenue increasing 15% up in US, 30% up for the whole company in the first 6 months of calendar year. US sales were bolstered by a significant new customer, a US university, which made the first of what we expect will be meaningful orders for our US subsidiary. Probably the most exciting thing I found in this particular announcement was, with December typically our strongest month in the US, we expect to generate positive EBITDA for the month in America. So a step in the right direction. 1 month positive EBITDA. Now they've got to keep their momentum going and generate positive EBITDA for more months. So continually doing it over many months in a row, and then they'll have a positive EBITDA quarter, positive EBITDA half year, positive EBITDA full year, positive cash flows, and then profitable. Anyway, they also talk about NDIS. Anyway, apparently that's challenging. Anyway, that's all I read when they talk about Drove further down here, but that's all I read. As soon as I saw that positive EBITDA for the month, I was like, yeah, exciting. The market didn't think that. Share price actually down. Maybe the market was disappointed. I have a feeling the share price or the chart is not as good as Botanics. Yeah, not as good as Botanics, but I probably am confident the downtrend, which was wild, was there for a long time. In fact, they listed back in 2020. Share price was $1 and now it's 6.3 cents. And this is a long downtrend, just kept on falling. And I am confident the downtrend is coming to an end. So that's good news for Control Bionics. Okay, let's move on to company coming in at number 3. We have Pexa. Pexa Group. Share price up because they have a new CEO. Up 8.2%. The very fact that the share price is up 8.2% on the news of a new CEO tells me that this guy, Russell Cohen, must be well thought of. Yes, so Pexa appoints Russell Cohen as Pexa Group MD and CEO. I've never heard of Russell Cohen. I did have a read of this announcement. I just wanted to see his background because you can get a pretty good idea about someone's background. Anyway, he has sort of an impressive background because he's worked with SoftBank before. They do mention it in this announcement. I also went online to have a look at him. Not him himself, but have a look at his background. I'm trying to find it here. So he was or is the managing director of a multinational technology company called Grab. I've never heard of Grab. I don't know if that's a big company or small company. In fact, I'm going to Google it right now. Company. Does it say how big it is? Oh, Singaporean. That's interesting. Singaporean. He's not the CEO. What they said he's the what is he? Group Managing Director of Operations. Yeah, that's definitely not the CEO. So they have a Wikipedia page, which is pretty big. Revenue of $2.359 billion, 6,000 employees, founded only 12 years ago. It's on the Nasdaq. Oh, it's on the Nasdaq. We can actually buy this company. Grab. There you go. Never heard of it before, but it's listed on the Nasdaq. And the chart, look at the chart. This is a great looking chart. Only $5. Markup of the company is $20 billion. There you go. Yeah, so maybe that's why the market is excited. If you have a look at the weekly chart for Grab, by the way, we're starting to see a bounce. Grab. I'm going to put this on my watch list. I have no idea what the company does. There it is. Anyway, so he had a position with Grab in Singapore, and he has extensive experience, it seems, in Asia, which might be a sign of the intentions of Pexa expanding into those markets. I'm just saying, this guy has extensive experience in Asia. And I'm not sure if they've announced plans of expanding into Asia before, but this could be sort of a sign of that happening. Maybe that's the reason why the market is excited. But he also had roles in SoftBank. And I'm pretty sure Russell Cohen is Australian. I'm pretty sure because he had his education I just saw via his background, educated University of Melbourne or something like that. Anyway, so the market likes it. Oh, Mr. Cohen's biography and summary included. We've got his summary here. I did not see this. I love this. Got his background. I should just where is it? I didn't see his background there. Oh, here it is. It's just I thought there was going to be like bullet points. He worked at Telstra. He holds a Master of IT from the University of Melbourne and a Bachelor of Commerce, Accounting Finance from Monash University. So I'm saying without doubt. Oh, Grab acquired Uber's Southeast Asia business in 2018. and he had played a pivotal role in that. There you go. He does sound impressive. I'll give you that. And the market likes this. So if the market likes it, I suppose I like it. And I'm just intrigued that he has extensive experience with companies that are based in Asia. So he probably would know a fair bit of people, people in higher places. So this could be exciting times for Pexa. The chart, this has probably put an end to the downtrend. So the share price looked like it was moving into a downtrend and a nice little rally today. Not a breakout or anything like that, but definitely probably has assuaged people's fears about the share price moving into a downtrend for Pexa Group. Okay. I just got a message. I don't know what it is, but I'll read it after I record this video. That's probably a good thing. Anyway, let's go to Karoon Energy. Now, there was a tight contest who was going to become the stock of the day between Karoon Energy. Now, I'm going to stop it there and just have a look at this message. So I'm going to put an ad in this particular spot. So go grab a drink or something and come back so I can just read this message. Okay, I am back. The reason I want to read the message because it just mentioned setting up a meeting. And I was like, ooh, okay, setting up, that's nothing to be concerned about. Anyway, let's go to Karoon Energy, coming number 2. So there was a tight contest between Data3 and Karoon Energy. And I decided whichever company's share price or whosever company's share price was down by the most percentage points would be the stock of the day. Now, just because, for instance, when I decided upon it, Data3 was down 9.7%, Karoon Energy was down about 9.1%. Now, there could be a possibility where Karoon Energy share price is down by more percentage-wise than Data3. So it all depends on timing. And no, Data3 down 9.84%. Okay, so Karoon Energy down 9.68%, which is unfortunate for me because I decided to take a trend position in this company. I expected a bounce and the bounce has never come. And that can be the problem when you do expect a bounce. There is potential, the bounce never comes. And then they release some bad news. Okay, and straight away, as soon as I saw this announcement, Buana shut down and updated guidance, I knew straight away the updated guidance would be a downgrade because they use the word shut down. And yes, it is a downgrade. I'm of the belief, and maybe this is just me, when a company issues guidance for the coming year, they should be quite conservative because things go wrong all the time. And if they are conservative, when something goes wrong, like what's happened with this shutdown in production, then it's covered by the conservative guidance. They probably don't even have to announce what's happened. But when they sort of are bullish when it comes to their guidance and something goes wrong, they have to announce it to the market because they have to decrease guidance. And I'll be honest with you, if they have lower guidance, I don't think the market's going to push share price down all that much. But if everything goes right and they actually have to upgrade, the market loves that. So I just wish management of companies are more conservative when they release guidance because things go wrong all the time. And here's something going wrong for Karoon Energy because they had to shut down production at Buana for some reason, which they go into. Some of this goes over my head. So they shut it down on the 11th of December, which is almost a week ago, in a safety control matter following an incident involving the mooring system on the FPSO Kikade whatever. Anyway, they go through some of the, maybe not logistics, but what went wrong, and it might take a little bit of time anyway. So because of this, without any certainty, when they'll go back to production, they've had to decrease their guidance slightly, but it's a decrease. And that's why the share price is down, because this is a downgrade. Now, sometimes bad things can happen out of their control. For instance, hurricanes, that sort of thing. They actually mentioned a hurricane here. This is due to Hurricane Rafael, which extended the scheduled maintenance shutdown period from 10 to 14 days to 18 days. So things can go wrong out of their control. And maybe even this thing that went wrong with this Buana was out of their control. And I think this is just further proof that management should be way more conservative when they're giving guidance because things go wrong all the time, which I've mentioned now 3 times in this part of the video. So let's have a look at the chart for Karoon Energy. And yeah, I expected a bounce. Here it is. The reason I expected a bounce, it was at a support level, and the bounce never happened. And in fact, the share price keeps on going down. So lesson learned. I have used that strategy successful in the past when I have seen the share price get to a support level, then you see a bounce. But in this case, no bounce. It fell through a few days later. I should have sold a few days later, but I didn't. And I think there is a potential. This company is getting to good value. Share price has dropped a lot. And I think there is definitely, so am I becoming more of a value investor when it comes to Karoon? And that's another reason why I was willing to take a position expecting a bounce, because I thought there was some good value. But here's a problem. Share price in a downtrend. Looks like it's good value, and then something goes wrong and the share price keeps on dropping. That is a problem when the share price is in a downtrend. So lesson learned when it comes to Karoon Energy, company coming in at number 2. Coming in number 1, we have Data3, share price down 9.84%. Company released a non-sensitive announcement. Data3 adapting to Microsoft Partner Incentive Program changes. They mentioned in this it's not material, or it's immaterial. The market said, nah, we don't believe you. We think this is material. In fact, it was not marked price sensitive. So I completely missed this. The only reason I knew this happened, they released this announcement yesterday afternoon. The only reason I knew is because I saw the share price down a fair bit. And I went, this is weird. They had to have released something. And yeah, that's company coming in number 1, Data3. I have done a standalone video on that company. Okay, I'm going to do one comment. One comment. Oh, someone mentioned why Southern Cross is under selling pressure. So that'll be interesting. I haven't read that yet. Let's have a look. Oh, here's one. Vin Healy, 8861. Hi, Kneppy. Have you opened a trade in Roblox yet? I follow and learn from you, and when I seen the chart, it looks like it's starting trending upwards. Okay, when I saw the chart, by the way. When I saw the chart. Anyway, the reason I want to talk about this is because, yes, indeed, I have taken a trading position in Roblox. I don't know much about this company at all, but I had a look at the chart, and I took a position after the 31st of October. Share price on that day rose 20% on a pretty good quarterly report. Share price didn't do much over the next weeks or so, but it went up. It broke out. This was a classic breakout. In fact, yeah, I should be talking about why this is a classic breakout. Company, okay, I'm looking for 3 things for a classic breakout. Maybe we can call this a Kneppy breakout. Looking for 3 things. Positive financial announcement, so quarterly report. I'm not sure why it was positive, can't remember. It could have been the outlook, it could have been they beat expectations, that sort of thing. And then I'm looking for share price getting to a long-term high. Before I was looking for a 6-month high. I have moved that to a 3-month high, but I do prefer at least a 6-month high. And this was definitely a long-term high. So when they did break out on the 31st of October, we're talking about a multi-year high. And it broke above a really long resistance level. It tested this resistance level 1, 2, 3, 4, 5, 6 times in the past 2 years. 2 years. And then the other thing I'm looking for is some good volume. And on this particular day, we had really good volume, some high volume coming in. And look at the chart since then. We had a bit of a dip, which is understandable. Share price hit the short-term moving average channel and then started to rally. Beautiful rally in Roblox. So yes, I am trading Roblox, and the only reason I took a position in this company is not because I think this company has long-term potential. It's just because of the chart. A pretty nice looking chart for this company. According to TradingView, this company is not profitable. Doesn't matter. Markup 40.3 million. So it doesn't matter. I'm just looking at the chart. Doesn't matter. I don't care about the company. Chart screamed technical buy to me. And so far, it's worked out well. Now, my only problem with American companies is I find the market over there really fickle, and it's over. I wouldn't say over reliant on quarterly results, but the market is very jumpy just on quarter results. So they seem to be 3-month focused. So it wouldn't be surprising to see Roblox release their next quarter results, might disappoint the market, and see share price drop 25%. See that a lot with companies over there. Rise and drop 20 or 30% on quarter results, and it could drop and rise 2 quarters in a row. So drop 20% and then rise 20%, or vice versa. So it's one thing I don't like about the American markets is they are focused on quarter results, and you see a lot of movement on those results. Okay, that's all I have for this particular video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.